Ladies and gentlemen, welcome to the Q4 FY24 earnings conference call of Vishnu Chemicals Limited, hosted by Emkay Global Financial Services. All participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the initial remarks conclude. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Meet Vora from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Welcome to the earnings conference call of Vishnu Chemicals Limited for the quarter and year ended 31st March 2024. I would like to welcome the management and thank them for giving us this opportunity to host them. We have with us today Mr. Siddhartha Cherukuri, Joint Managing Director, and Mr. Hanumant Bansali, Vice President Finance. Before we begin this call, I would like to point out that the discussion during this call may contain forward-looking statements reflecting the company's current view of future events and their potential effect on Vishnu Chemicals' operating and financial performance. These statements involve uncertainties and risks which may cause actual results to differ. The company is under no obligation to provide subsequent updates to these forward-looking statements. I shall now hand over the call to the management for their opening remarks. Thank you, and over to you, sir.
Thank you, Meet, and good afternoon, everyone. We've ended this financial year on a strong note. For the full year, we generated an operating revenue of 1,213 crores, with an EBITDA of 202 crores and a PAT margin of 101 crores. The EBITDA margin expansion was driven by disciplined focus across both value addition and backward integration initiatives. Our performance was empowered by the belief of being persistent, taking measured risks, and keeping the communication simple with our customers and employees. New cash flow from operations cash grew 179% during FY24 compared to first half of FY24, demonstrating the cash generation capability of the enterprise and strengthening our financial position. Macroeconomic headwinds faced during financial year 24 proved this year to be significant. Our perseverance aimed at improving the profitability of the company while prioritizing customer success led to several collective accomplishments during this year. We have acquired Ramdas Minerals Private Limited during this financial year with the plant being operational. We have saved valuable time compared to embarking on a greenfield project. Ramdas' addition to our portfolio has strengthened our barium business from a long-term perspective as it enables us to curtail the cost of raw materials, ensuring continued supply for our customers, and create greater value for our shareholders. We also commissioned a state-of-the-art precipitated barium sulfate plant and a 4.3 megawatt solar power plant during financial year 24. These accomplishments not only enhance our operational capacity but also reflect our commitment to sustainable growth and energy conservation. Our unique capabilities like flexible product mix and process innovation executed over the year make us one of the most efficient producers of chromium and barium chemicals in the world. We have entered financial year 25 with the same core belief of doing business with efficiency, nurturing complex chemistry, and grow in the areas that will provide sustained economic and commercial benefits to the company. Now I'll hand over to Hanumant, who will provide further details on our financial performance. Following that, we look forward to addressing your questions. Thank you very much.
Thank you, Mr. Siddharth, and good afternoon, everyone. The consolidated sales in Q4 FY24 was 300 crores compared to 304 crores in Q3 FY24. On an annual basis, the FY24 sales was 1,213 crores compared to 1,391 crores in FY23. The consolidated EBITDA increased by 55% from 41 crores in Q3 FY24 to 64 crores in Q4 FY24. the company registered an EBITDA margin of 21% in Q4 FY24, an increase of 766 basis points during the quarter ended 31st March 2024. The consolidated PAT increased by 34% from 21 crores in Q3 FY24 to 28 crores in Q4 FY24. The net profit margin of the company in Q4 FY24 was 9.2% compared to 6.8% in Q3 FY24. On the standalone front, the exports accounted for 48% of the total sales in H2 FY24, up from 44% in H1 FY24. The standalone sales of the company recorded a marginal decline of 4% from 253 crores in Q3 FY24 to rupees 243 crores in Q4 FY24. Notwithstanding the declining top line, the standalone EBITDA rose by 37% on a quarter-on-quarter basis from 33 crores in Q3 FY24 to 45 crores in Q4 FY24. Our standalone EBITDA margins were 19% in this quarter compared to 16% in Q3 FY24. The standalone PAT for Q4 FY24 was 23 crores compared to 22 crores in Q3 FY24. The net profit margin on a standalone basis remained at the same 9% on a quarter-on-quarter basis. The fourth quarter and the full year highlighted the resilience demonstrated by Vishnu Chemicals Limited. In fact, we recorded the highest ever volumes produced and sold in FY24. On the balance sheet front, the company has reduced its long-term borrowings by nearly 90 crores in FY24. This reduction indicates an effort to lower our debt, which has improved the company's financial stability and also reduced the interest expenses. The debt to equity ratio was 0.45 as on 31st March 2024. The company has a continuous track record of paying dividends. This year, the board has recommended a dividend of 30 paisa per equity share of face value 2 rupees each for the year FY24, and the same shall be paid subject to approval of the shareholders. I request the members of this call to note that our results and investor presentations have been uploaded on the stock exchanges and the company's website. With this, I conclude my opening remarks, and we can now commence the Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you have any questions at this moment, please press star and 1. Our first question is from the line of Sagar Jethwani from Phillip Capital. Please go ahead.
Yeah, thanks for the opportunity. My voice is audible?
Yes, sir, your voice is audible, but there is a background sound from your side.
Just one. Hello, is it better now?
Much better, sir. Please go ahead.
Yeah, thanks. Sir, my first question is that are we on a track to take the price hike in Q1 FY25 as we guided earlier? What would be the quantum of these price hikes, and will it be across the product portfolio? That is my first question. Second is, what led to this kind of a margin expansion during the quarter, and will these margins be sustaining going ahead? Third is on the capex guidance for FY25, if you can give some details on that. And lastly, apart from the chrome metal, any other new products that are in pipeline, if you can share that.
Yeah, good afternoon. So regarding the price hike, in certain products here we have already announced, given the market conditions and overall demand in those value add have been quite strong. So I think we will be successfully able to increase, have at least 4 to 5% increase in certain value add products. But generally speaking, in our core product, we are not foreseeing any significant price increase during this quarter, which is sodium dichromate. Whereas in our barium vertical, so we are seeing a good price increases happening during this quarter and even the next quarter. We're looking at least 10 to 15% price increase, both in the domestic as well as export market. And margin sustainability, we see this going to be. Hello?
Yeah.
Yeah. So the margin sustainability is looking quite steady. Reason being, the backward integration project is progressing well. We have seen a better yield, especially with respect to our CO2 certification. This quarter we have achieved 90%, and this is going to continue. And what we are seeing is also the soda ash price is increasing in the quarter to come. So that is definitely going to add in terms of improved EBITDA margins in the next quarter. And the capex guidance right now, we are quite focused. I mean, we are going to see 10,000 tons of additional dichromate capacity going to come online towards the end of this quarter, and we'll be right now more focused on achieving achieving the desired outputs from the capacity build, and probably towards next quarter is when we can guide towards our capex plan.
Yeah. And lastly, on the products in pipeline.
Well, the chromium metal project, it's progressing well. We have done some pilot work at our R&D plant, and we're looking at launching this product towards early next year. And apart regarding new products, they're still under R&D phase. I won't be able to talk much about it this century.
Sure. That's very helpful, sir. Thank you.
Thank you. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah. Thank you for taking my question, sir, and congratulations for a good set of numbers. So first of all, with our new PBS capacity coming into play, and overall we are seeing some bit of
Sorry, your voice is not audible, Mr. Sinha.
Yeah, just a second. Am I audible now?
Yeah, better.
Yeah. So as our PBS capacity is on stream, and we are seeing a bit of improvement in utilization in overall capacity. So just wanted to understand what kind of volume growth we should be expecting for FY25, and what sort of price increase potentially we will be seeing, as you have already indicated that 4 to 5% kind of price increase could be possible for value-added products. And secondly, since we have done 20 plus kind of margin in this quarter, amid we can say that there's a pressure on the barium sulfate side from the China. So given the point that going forward this pressure succeed, can we expect a better sort of margin in the overall segment?
Let me put some light on the barium. So we are expecting at least a 50% volume growth in barium chemical. Although we are seeing some kind of pricing pressure coming from China, but that we are able to balance it with offering a better product with the desired packaging to the end user industry. In terms of if I take a consolidated volume growth for the for the financial year, we are looking at least 30 to 35% volume growth during this financial year.
Okay, 30 to 35%. I think might be 3 to 5% kind of price increase possible.
Yes, it is. I mean, it depends on which product we are talking about. It depends upon what our strategy is in, because we are looking at a volume growth. And do you want to pass on certain benefit to the customer and keep the volumes up and the revenue up? It's a call. It's a call we will take. Should not be a going concern for us.
Okay.
But yeah, but on a whole, we will see at about 3 to 4% of the price increase.
So I mean, again on the margin side, I mean, just wanted to get some sense that whether 20% plus kind of margin run rate would be sustainable for us.
It should be, given that we are talking about the volume growth. Definitely, the economics of scale will definitely kick in, so that should drive the EBITDA margin. I can't give you the exact number. I mean, won't be able to give a guidance for the whole year, but yeah, for sure, where we are in terms of the EBITDA margin of 17 to 18%, yeah, that's definitely sustainable. Yeah, what we aim for will be 20%. Will that be achievable? I mean, yeah, given the order book and given the kind of volumes we want to do, yeah, it is something we will aim for, and towards the end of the year, we will be targeting at that kind of EBITDA margin.
Okay. And can we get just a breakup in terms of revenue which is coming from our end user industries, like from pharma and from paint industry and all that? What sort of broader sense on the percentage side?
I won't be able to give you a breakup per se, but I can tell you about the pharma, which is about 20 to 25% of our revenue. And like the leather industry will be about 15 to 18%, and electroplating and wood preservative application will be close to 20-25% today. And we also have now wood pigments and paint industry, which contributes to about 20%, and the rest would be others.
Okay. Thank you, and that's from my side, sir. In the Thank you.
Thank you, Mr. Sen.
Thank you. The next question is from the line of Suruchi Parmar from NX Wealth Management. Please go ahead.
Hello. Hello.
Please go ahead.
Yes.
Yeah, am I audible?
Yes.
Yeah. Thank you so much for the opportunity, sir. Sir, I would like to know about your strategy going forward to tackle the sales pressure on the precipitated barium sulfate.
Hello, Mr. Suruchi.
Yeah.
Like I said, it's not to do with the sales pressure. It's more to do with the pricing issue.
Okay.
There is a good, growth in general per se in the powder coating industry. There's a good growth. So we're looking at a year-on-year growth of about 11 to 12%. So the volumes keep going up. Like when we have emphasized the project versus now, the demand has gone up by close to 40% in terms of volume. But being a new player in the market, like we have launched this product, it's been 9 months now. I think we made a good customer wins over the last 9 months. Obviously, it has come with a cost. And moving forward, we will definitely work towards direction where we can, get some price increases in this accounts. But it will be in a very gradual phase. So the plant is currently operating at close to 60-70%, and the order book is looking solid. So moving forward, we will try to work towards direction where we can announce some price increases and it should be accepted.
Okay. So you are saying
not
that
a concern, more to do with the pricing.
Okay. So this pricing issue is because of you have said that dumping from China, particularly.
Yeah, I think especially toward for the last 6 months, there have been especially because the construction industry and the paint industry is not doing very well in China. And for them, India is a big market. So we are having some challenges with respect to the pricing, but it's been taken care. because we are able to offer tailor-made product with a certain specification and a better packaging. So by leveraging this, we are able to get some premium over, what Chinese are offering in the market.
So there must be a difference in quality, what they are offering and your company is making, correct?
Yes, there's a difference in the quality, also in terms of delivery systems, what we offer versus it is a lot more flexible.
So what feedback you have got from your client, like who are taking precipitated barium sulfate from you, that how they see, like they are happy with your product and they want to continue?
Yeah, the feedback is very positive, but they are already. They say that they will definitely go up to 80% of their demand with us, but it will be in a very gradual pace.
Okay.
Right now we are at 40 to 50% in certain big accounts. So they don't. They will definitely make a switch and give us a higher share, close to 80 to 90% over the next 6 months. I'm hoping it, because they want to see the consistency in the product and the delivery.
Mm-hmm.
We are quite confident to deliver and achieve.
Okay. And so regarding the chromium metal which you are going to launch next year, so how is the market demand, and who all are the competitors? Like, you are the only one who's making in India, or is there any competitor in India and outside India? What you see?
It's quite an interesting product, mainly going into the defense and welding electrode industry. In India, we'll be the only producer, because most of the Indian current demand is met by imports, mainly coming from Europe, China, and a bit from Russia as well. So there has been a consistent growth in this product, especially in the defense side as well as welding electrode industry. So I think the total Indian demand is close to about 2,000 tons this juncture, and it will continue to grow.
So the imports, like if you bring your capacity, and so in India, they will prefer buying from you rather than buying from importing the product. Like what basis, like you think when
there's a domestic producer, obviously they will lean towards us. Obviously, it takes time, because it has to go through a process of testing, approving, and then accepting it. But yeah, I think we also we try to focus on offering a quality product, so that will also give us benefit moving forward.
Okay.
And we are working with the right set of team and the right consultant, so we are confident of achieving the right quality product.
Okay, thank you, sir. And lastly, what is the status on Red Sea prices? Like, still it is going on, or you have to hold more inventory? Or?
Yeah, it still seems to be holding on, not getting any better in general, because lately there's another challenge of shortage of equipment. The pricing has been done on a monthly basis for the container. So that seems to be a challenge, but we are hoping maybe in a quarter or 2 quarters down the line it should get better.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yeah, hi, sir. For the chrome chemistry, or the chromium business, in 24, what would have been your volume performance or volume growth?
Good afternoon, Mr. Chheda. In FY24, our volume performance was marginally better than FY23. But overall, we still operated at nearly 80%. So last year we operated at 80%. This year we operated around 80.5%.
Okay. So which means that the whole revenue dip that I see of about plus 20% is to purely do with the realization.
That is correct.
Okay.
That's in line with the overall reduction in sea freights through the year, and also the reduction in prices of raw material bearing chrome ore.
So there is reduction in raw material barring chrome ore.
That's right. Yeah.
Okay. Chrome ore continues to go up. So were you was there any inability to take price increases linked to chrome ore then?
There are two parts to this question. One is we had the ability to increase the prices in select products where there was good demand, especially in the areas of electroplating, wood preservatives, pigments and dyes. But in certain areas, we saw a little bit of softness, especially in the export sector. So to contain this macroeconomic scenario, we did not particularly go for a price increase for our export customers to assist them with their end user handling. But things are slightly changing on the ground now. The standalone revenues in Q4 improved from the quarter that ended in December, and it increased from the export segment also. So if the trend continues, maybe by the second half of the year, we'll see the export markets revising a little bit more, and then it will be easier for us to pass the increase in the prices to our customers.
No, so now Q4 specifically for us, chrome is, if I look at past so many quarters, it seems to be a quarter where it's a seasonally higher quarter only. So do you still want to take this Q4 as your base to comment? Because Q4 last year was also same way. Q4 22 was also the same way.
Q4 last year, so we don't have a trend where Q4 is necessarily better as such. But just to answer your question, our Q4 FY23 was better than Q3 FY24 because we had a maintenance that we had taken in Q3 FY23, due to which our capacity utilization was in the range of about 65%. And that's the reason why Q4 FY23 operated at higher levels, due to which the operating revenues went up. This year it was not just like that. We operated at nearly the same capacities in Q3 and Q4, and we did not see any major change in the realization per kg. So over the last few quarters, our entire efforts have been to keep the margins intact without necessarily having to increase the prices for our customers. We have done this primarily through our backward integration measures, which has helped us reduce the offtake of input feedstock for the production to a certain extent, and also our carbon dioxide recovery and acidification plant, which has improved our indigenous production of sodium carbonate.
So in chrome chemicals business, we should now consider as a more FY24 to be a more stabilized number and not FY23, because FY23 had the realization as well.
We hope the markets will improve, especially in the export markets. The domestic market is very good in terms of volume demand, but prices are more driven from the export markets. And that is something that we are also watching on the ground.
I didn't understand. So basically, I didn't understand this. So you have a big variation in your profitability from 22, 23, and 24. And 23 to 24 had the backward integration benefit also.
Yeah.
Considering the variation in the profitability being so large, the absolute number for the similar utilization, it would be very helpful if you guys could comment what's a more stable number.
Here the answer is very simple. FY23 and FY22 were 2 years that probably were the very, very different years in terms of the entire last 2 decades of manufacturing that we had seen. Right, where the prices of raw materials went up, the sea freight went up. At the same time, the demand globally also went up. FY24 was a year where the prices of raw materials did not come down. The sea freights did come down, but the demand also came down significantly, especially from the export markets. Having said so, as a company, what we try to do is we mitigated the risk of losing our market share without trying to be over-ambitious on price increase. And that's where we saw good customer retention through the year compared to our global peers, which, could not hold on to the EBITDA margin profile. So on a year-on-year basis, you see, we have maintained our EBITDA margins at nearly 16% on a chromium chemicals level.
Yeah, but then you have lost your absolute EBITDA by 25% despite the carbon dioxide benefit coming in. So I don't understand this comment.
We always
one way is you look at percentage, the other way is look at absolute. So it would be very nice if you would comment on the absolutes.
On the absolute, it's the same answer. Like I said, demand is not in the hands of the company. We, as a company, never anticipated that export market would come to a standstill the way it is right now.
Mm-hmm.
Things on the ground are looking to change, and we hope that by Q2 or Q3, export markets revive, and we can also see the uptick in the absolute EBITDA for us to achieve that we have achieved in the past.
Okay. Then on the balance sheet side, there is this 100 crore increase in inventory and about 120 crore being spent on the capex. So you guys raised about 200 crore via equity, but I see only about 60-70 crore of debt repayment. So what is this 100 crore inventory increase, and what is this? And you've been spending in capex since the last 2 years. I see a number of 120 crores. If you could just comment, for last 2 years back to back you have spent now. Where is it spent for?
On the inventory side, as you've seen that through the year, we started seeing the Red Sea crisis becoming a problem for all of us. So the crisis has increased the transit time by nearly 2 weeks to 4 weeks on most of the routes. As a result, we have been maintaining higher inventory of raw materials to ensure continuous supply of feedstock to our plants, as well as higher inventories of finished goods are being maintained so that we can enable quick dispatches to our export customers. And that's the reason why the inventory has gone up. Secondly, the inventory has also gone up because of the higher value of chrome ore, which forms a significant part of our inventory compared to FY23. On the capex side, FY24 we spent nearly about 120 crores on capex throughout the company. Out of this, 53 crores were spent towards chromium chemicals, and the balance was spent in barium chemicals. In chromium chemicals, 53 crores went primarily through the following things. One is the volume expansion in sodium bicarbonate that we've already started. And second is we have done a replacement capex of nearly about 25 crores to replace the depreciated assets. And we undertook nearly about 20 crores of investments in process improvement and modernization of certain equipments. This has led to a reduction in input feedstock in our chromium chemicals. And 67 crores were spent in barium chemicals towards upgradation of the newly acquired plant under the company Ramdas Minerals, and also completion of pending works in precipitated barium sulfate plant, which is commissioned in FY24.
Okay. And my last question is, in the Q4, there is a significant upswing in the number or change in the number for the barium business. The EBITDA number is a fairly larger number.
Yes.
Any comments there specifically?
Yeah, majorly.
Because for a QOQ, hardly any change in revenue. The change in EBITDA is very high, significant.
So here, the improvement was on 2 grounds. One is the plant that we acquired last year under the company Ramdas Minerals started giving us good throughput from the Q4 onwards. That led to a margin expansion. Secondly, our product by the name barium carbonate saw increased throughput throughout the quarter due to very good demand that we could see from the North American markets. Our
that should reflect in your revenue, right? If there is a throughput increase or there is, because the revenue is just 5 crores up.
There are two parts to it. Our fixed costs, which were expensed at a lower capacity utilization till about Q3, were flat in Q4. Whereas that 5 crore that you're talking about, the increase in revenues, straight away improved our operating leverage, and we did not have to spend more on promotion costs, be it our employee costs or manufacturing expenses or power costs also to that matter.
Yeah, but then that explains just 5 crore. There's a movement from 7 crores to 19, so there's an incremental 12. 5 crore comes from revenue out of that 12. Still, there's a 7 crore extra number.
We also had solution in our precipitated barium sulfate project, where we increased our capacity utilization over there. So till about first 9 months, we operated at nearly about 24%, whereas in Q4 we operated at more than 40% capacity utilization.
And how much does Ramdas acquisition contribute to the EBITDA? What is the P&L there?
We cannot share those numbers right now. It's quite sensitive because it also is passed on to the markets at large. But the savings are quite attractive for us in the long term.
So that company will help you get a raw material?
That company helps us in converting lower grade feedstock into higher grade feedstock. So it saves us on the cost of acquiring the purest grade of variety from the market.
Okay. So, and that started working full swing last quarter?
Not full swing. We're still operating at 75% utilization, which should go up to about 80-85% from this financial year on.
So, barite to make barium, right?
That's right.
Okay. And it has its own mines or?
No, we don't own any mine under any company.
Okay. Okay. Done. Thank you.
Thank you.
Thank you. The next question is from the line of Rakesh Tavera from 4R Investment. Please go ahead.
Good afternoon, sir. Thank you for taking my question. Hello, am I audible?
Good afternoon, Mr. Rakesh. Please go ahead.
Yeah, my first question regarding our recent acquisition of Ramdas Minerals, how it actually impacts our margins ahead.
Okay. Can you ask your second question as well? We'll answer both of them together.
Okay. My second question is regarding barium segment. So, what is the guidance for barium segment growth and its volumes expected in Q1 FY2025? And do you have any new products upcoming in barium segment? And other thing is, like we have commissioned a precipitated barium sulfate plant, and how it's going to impact on FY2025.
So, Mr. Rakesh, we announced the acquisition of Ramdas Minerals in FY24, and it was a strategic acquisition which helped our company in reducing the overall cost of our raw materials and elevating the overall quality of our feedstock. So, the acquisition includes an asset which is operating out of Street LLC, very close to our existing plant in Street LLC, which produces the barium chemicals. So, it is right in the middle of the raw material source and our production unit. That helps us in acquiring the raw materials from the mine that is owned by the state government, bring it down to Ramdas Minerals beneficiation plant, where we achieve the desired output of raw materials that we require for eventual production. And that has led to significant improvements in our feedstock, which has helped us reduce the cost of raw materials by quite a significant percentage.
Overall, you mean to say that it will impact margin significantly?
We are looking at it from a very long-term perspective. yes, it has impacted our margins positively. At the same time, where we see that for the next 10 years, we don't have to depend on the highest grade of raw material to be acquired from the mine, and that reduces our overall dependency on market movements in the minerals that we buy.
Okay. And yeah, so coming to second question, barium segment.
On the barium segment, we have seen a good year overall, and that has been the key driver of our performance in FY24. FY25 also, we continue to see that the momentum will carry forward. We expect our volumes to increase by in the range of nearly about 50% compared to FY24, and we're quite excited and upbeat about this.
And do we see improvement in domestic or is any deviation in export? I mean, reducing margin, reducing volumes in export or improvement in domestic? How can we understand this? Since last time 35 to, yeah, continue.
If I compare the markets in general, the barium chemicals that we manufacture goes into the building material segment or the construction industry at large, which is not really doing well, especially in the export markets. But we have entered into newer territories compared to what we were doing in FY24. And now we have started marketing more in developed countries. So our customer wins this year in barium has helped us increase our offtake and sales volume, which will lead to better volume offtake in the years to come also.
Okay, and about this precipitated barium sulfate, and how will it improve volume?
On the volume side, it's a wait and watch situation. We don't want to sell at a price which is going to affect our EBITDA negatively. So we are very cautious about the price at which we sell because clearly there is a quality differentiator. However, we continue to withstand against the Chinese competition that is flowing into the country, and we hope that in this financial year we are able to take at least 20% of the market share in India in precipitated barium sulfate.
Okay, and the China's impact, the dumping, when will it you expect to last?
Very hard for us to answer that because it's not a market information that we are aware of how Chinese are going to supply their product in which territory. But we hope that globally there is going to be improvement in exports, and that will divert a little bit of volumes from China to other countries instead of just being diverted to India as of now.
And so, last question is regarding this client concentration in outside India. How we are looking at it?
We don't have a client concentration. None of our customers have more than 5 to 6% share in our overall turnover.
Okay. Fine. Thank you.
Thank you. The next question is from the line of Hemant Shah from ITI Mutual Fund. Please go ahead.
Hello. Hello.
Yeah. Hello.
Yeah, hi. So if one has to, dissect the journey from here on, clearly you have tailwinds in your favor in the chromium, with, possibly exports also being a large portion of that. And, it coming back in terms of minus the raw material pass-through that you possibly need to overcome. And on the barium side, you are seeing pressure from the Chinese, but given our quality, given our, steps that you have taken with different leading players in India itself. So overall, how would you like to procrastinate immediate future plus the future henceforth? So if you can just quickly summarize this, I mean, would you say that you would target a 20% top line growth by and large given current raw material prices?
Yeah. So thank you, Mr. Deeman. This is Siddharth with you. When you mentioned about tailwinds in chrome, we see quite a bit strong tailwinds even in the barium. Barring aside, temporary challenges of pricing related issue in the barium substrate, that has been, I would say, partially outweighed with the strong barium carbonate order book, which is coming from the West. So I think
just sorry to could you also comment now with all these steps? Do you think you are a cost leader in both the verticals in your assessment, even globally?
But it depends on which product we are talking about. Obviously, I don't have a complete variable cost breakup and a breakup of RPF generally per se. But if you're talking about chrome, I think we are considering the backward integration benefits, considering economies of scale. I think we should be relatively competitive. But again, compared to a peer in Turkey who is able to leverage their currency benefit to a large extent, it's very difficult to say where we stand when it compares to a currency which is depreciating 15-20% on a Y-on-Y basis. But in terms of variable cost, in terms of fixed cost, yeah, I mean, we are one among the most cost-efficient producers. I cannot say the lowest cost producer. That's a big statement to make, but we are very cost-efficient producer, and who are having a strong market base in India, being the only producer.
This is in both the chromium and barium, or only barium?
Both chromium and barium, I would say.
I see.
And when coming to barium, I think, given the kind of volumes we are looking at, like they've already given the commentary that we're looking at about 50% volume growth with the kind of economies of scale it's going to kick in. I think we will be quite competitive against any Chinese producer, and especially with the Ramadas benefit factoring in. Yeah, I think that gives us a very strong position in general moving forward.
Correct. And is this a phenomena once a year, which typically the Chinese seem to be, kind of bereft of normal brain usage? Something of this variety happens to them in all the segments that they operate. So this pricing activity, which they typically are in a punitive form, does it happen typically once a year or slightly more?
Difficult to answer that question, to be honest with you. But it's as you know very well, you must have heard from the other chemical producers, it's very cyclical. It depends on how their domestic market is doing and what kind of benefit.
Last 2-3 years, what is your experience? Every year they, try to clear their inventory or something of that variety?
I think it completely depends on their inventory levels, to be honest.
Yeah, that's what.
Yeah, because like we see again, the barium carbonate demand has come back very strong, and especially with a producer in North America closing. So we have almost I would say we have capitalized on that benefit. Trying to cater to the North American market, barium carbonate that's taking care of the capacity in a big way.
Yeah, actually, that was my second question, because given the way the certain cost geographies would respond, there would be also closures of some of the operating, capacity, and hence, in that light, do you think we would have, we would gain in terms of cost and ability to produce various grades and so on and so forth?
Yeah, that's right.
Super. And lastly, on our ability to pass on some of these cost rise, including the freight, given the Red Sea issue, how easy or difficult is that?
Yeah, well, it depends on vertical we are talking about. If it's barium, because we are comparing with China, I think we do have a benefit there. Because compared to China's sea price out of India to various destinations, either to east or west, I think we are still very competitive. So passing on freight increases doesn't seem to be a challenge, and we are always talking on FOB plus freight basis. So that seems to be going well. Apart from, trying to arrange the inventory, the equipment, I think our logistics team is still doing a very good job, so we don't see that as a problem. And in terms of chromium, well, I think because the peer industry is spread all around the world. So we're talking about Turkey, South Africa, China and Russia. So few of them have benefits in terms of where they're located, either they're moving west or east. They do have some benefits on the freight to certain sector. So that seems to be a challenge with where we are trying to work and see what we could do.
Okay. And lastly, in terms of, I can see that, your entire tilt is to get cost efficiencies, be it on the barium side or chromium side, and to a great extent backward integrate. So how far are you in that journey on both the sides, and any plans into the future which will, kind of really cement your costs and give us some advantage as and when the pricing is conducive?
Yeah, well, just to add to what you said, our focus will be to improve our cost position by means of backward integration, and not just backward integration, but also in terms of process improvement where we can improve the yield. We are actively working on it, and and that's been, we have witnessed that in the quarter gone by in terms of better, throughput and output. That's definitely adding to our EBITDA margin, and not just we continue to focus on a flexible product mix and see which derivative is more margin effective versus the other. So I think moving forward, we will definitely focus towards, increasing our chrome oxide and chromium metal production, which we believe will be very margin effective. So yeah.
Perfect. Thank you for answering these.
Thank you, Mr. Deeman.
Thank you. The next question is from the line of Aditya Chheda from InCred AMC. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. My first question is, what percentage of soda ash now we would be able to produce internally?
Well, you're looking at about 50%.
Right. And I wanted to understand whether there is an element of realization uptick possible by virtue of the mix moving more towards derivatives versus SBP in the past, or the mix is expected to remain where it is?
Yeah, it is possible. It depends on which value add we are talking about and how that end user industry is doing. And we are seeing it value add where there's more internal consumption of our key starting raw material. So by virtue of that, the economies of scale will increase, and we will definitely say improved EBITDA margin as a whole.
Sure. And my last question is on the more longer-term vision that you have for Vishnu. We've already spoken about capacity expansion in chromium. There is a new product in barium chemicals. But if you could sort of, if you have anything to share about what do you think about both the segments or for the company in a more longer-term scenario, which will be after 3-5 years. Yeah, that's the last question.
Well, with this capacity expansion and the chrome metal coming in, I think we will be quite busy for the next 2 financial years, I would say. And moving forward, our R&D team is actively developing, working on the other value adds, which we are very seriously working on a value add in our barium, which would be an organic solvent. That seems to be very interesting and exciting for us. But I can't give you the name right now, but that's something we will be very actively working on, which would also need a capex, probably a year down the line.
Got it, sir. Thank you for that.
Thank you. The next question is from the line of Srinarayan Mishra from Noops Consultants Family Office. Please go ahead.
Good afternoon, sir. Can you hear me?
Yeah.
Yes, sir. So, is there any development on the chromo reserve acquisition front?
Well, at this juncture, excuses, but we won't be able to comment.
Okay. So this quarter there would be some price increase in the chromos. So once we acquire that reserve, how much would be the benefit due to the chromo reserve acquisition?
Like you said, I mean, we are seeing some price increases further for the next quarter. So what we are currently focused on is to discuss with our end users and pass on those price increases, which we are quite confident on achieving. That's what I can say.
Okay. And is there any timeline in terms of this, or as of now, no concrete plan?
No. I mean, we can't give you a timeline, but yeah, we can only say that we are still working on it.
Okay. Got it. And in terms of the mix exports and domestics, how it would be like in the next year in both chrome and barium vertical? And in exports, how much would be the repeat orders? How much it was in FY24 and how much you expect next year?
So FY24 was like the ratio was 55% domestic and 45 export. I mean, the way I look at it, although will be a revenue increase on account of exports and domestic, I see that the share will remain more or less same, or maybe 1 or 2% more towards export in general. I would say it could be 52-53% domestic and 47% export.
And in terms of repeat orders, sir, so are you getting good repeat orders as well in exports from?
Yes. I mean, we are seeing a good order pipeline. That's what I would say for both our chromium and barium chemicals. So we call that repeat orders.
Okay. All right. And so you alluded to that, it would be easier for us to pass on the freight costs. So just wanted to understand if that can be done for the past quarters also, or that is gone. So, I mean, if you can pass on, will it be for the quantity already supplied, or it will be only for prospective deliveries?
It will be for the prospective delivery, obviously. So, I mean, most of our customers, all of them are aware of what's happening with the Red Sea. So, they're cognizant of the fact that prices are going to increase and the CI prices are bound to increase.
Okay, so this will be prospective, right?
Yeah, that's right.
Okay. Thank you, sir. That's all.
Thank you. The next question is from the line of Shyam Garg from Ladder Up Finance Limited. Please go ahead.
Thanks for the opportunity, sir. My first question is with respect to the order book that we have in chromium and barium.
Sorry to interrupt. Shyam sir, your voice is sounding muffled. If you're using the speakerphone, maybe request you use the handset and ask the question once again, please.
Is it better now?
Slightly better, sir. Yes, please.
My first question is, what is the order book in chromium and barium products?
Yeah, good afternoon, Mr. Shyam. We can't quantify the order book right now, but our order book is looking quite robust at this moment. Like I shared with you, we have a combination of chromium and barium chemicals. We have a coherent portfolio of more than 7 products in our chromium chemicals, and now in barium chemicals we have more than 2 products. So we won't be able to give you an exact number on our order book in either of the chemistry, because especially in chromium chemicals, our product mix is quite flexible. So since all our plants are operating, we have a steady flow of inquiries for our products. We are able to penetrate into developed economies like North America, USA, etc. Not just in existing applications, but in applications where there is more value for every kg that we sell. We are quite hoping to keep developing these grades to meet the newer requirements of our customers.
Okay. Okay, sir. Okay. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, we would take that as our last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you. I'd like to thank all the investors and participants who joined the call today. Thank you for taking out your time. If you have any queries, feel free to reach out to us on investors@vishnukemicals.com, and we'll be able to reach out to you. We'll be able to respond to your queries on priority. Thank you so much.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us. You may now disconnect your lines.